Squawk on the Street. I'm Steve Liesman. The big Fed news of the morning, of course, is Fed Chair Powell in his testimony before Congress pushing back against the possibility of a July rate cut from two of his committee members. More on that in just a second. But first, we have new comments from Cleveland Fed President Beth Hammack adding to the chair's view that rates should remain on hold. She says she does not see economic weakening that would merit rate cuts. The risk to maintaining current policy, she says, appear to be low. Current policy is only modestly restrictive. In fact, she says it's close to neutral. And if both sides of the mandate come under pressure, that stagflationary concern some have, the best choice, she says, is to hold policy steady. And in fact, she warns policy could remain on hold, quote, for quite some time before the Fed does some modest cuts. And she does see a disconnect between the optimism in markets, which we see this morning, and the cautiousness that she hears from businesses she talks to in her district. Two factors, weaker dollar and higher oil prices, could add to pressure on consumer prices. But she does concede it's possible tariffs could have a short-lived effect. On Powell, very quickly, he did say that the Fed is well positioned to learn more about the course of the economy before adjusting policy. And the Fed needs to prevent one-time price increases from becoming ongoing inflation, essentially repeating his views. We have, very quickly, I'll show you the July Fed funds futures did drop on Powell's comments, but they remain relatively high for September and December. We'll have gavel-to-gavel coverage from the Q&A of Chair Powell's testimony with a big question about how much pressure he gets from lawmakers to cut rates as the president has demanded. Squawk on the Street, coming right back.